Bang.
Bang. What is up, folks? Welcome back to another edition of the Daily Crypto Byte. Today is Monday, September 20th. And I can tell you one thing right now. This is not going to be a boring week. We are already seeing some very interesting price action in both the traditional equity markets and in turn in Bitcoin. So we got plenty to talk about today. And I think we're going to see some fireworks this week across the board. So I am very excited. Before we dive right into things, Dr. Finfluence, CJ, how are you guys doing today?
Doing well. I think you nailed it. It is not going to be a boring week. People will say, oh, well, we're just waiting for the Fed on Wednesday. And we are. But we're not just waiting for them. I mean, look at the move the market made just in the last 12 hours, moving down as fast as we moved down. Evergrande is something, that big Chinese property play that we knew was going to be in the news for a while because they have some $300 billion in debt. Now, in the greater scheme of things, is that huge? It's big, but it's, certainly China, if they elect to bail them out, and they have a payment due today, which I imagine they're going to default on. And I don't mean China, I mean Evergrande, the property company. But their bonds have been, just sliced and diced. The stock is upside down, and people keep thinking that this points to a contagion, like we saw in the 2007 financial crisis. And I would say, for the most part, guys, no, there could be other things that could lead to that. And this could certainly make people nervous and has made people nervous. But, quite frankly, the leverage ratios that some of these Chinese property companies have, especially for some of the ghost cities that they've built, it's not really a global issue. I understand what happens in China sort of rattles cages all around the world. But in this case, I think the main suffering parties will be China and some of the near Asian economies that have bet on China, not so much the Western world.
Yeah, to your point, John, I want to bring up a piece of history because this issue it's not new. We actually have this article, which we're kind of talking about before the show, which was in 2015. Same type of problems with Evergrande, and they were actually issued a $16 billion lifeline by the Chinese government because they were considered too big to fail, and things had kind of recovered ever since then. So, I think this leads to two things. We get a potential lifeline similar to what they saw in 2015. Also, I think this gives the Fed a really good excuse not to taper and to kick the can down the road a little bit further. So, I don't think this is detrimental, seemingly like 2008 yet.
Yeah, I'm inclined to agree, and I'm glad we have John on the show today because I've definitely seen, kind of a split opinion on that, though, on Twitter. Some people think this is a big deal. Some people think this is not a big deal. John, you seem to be leading on in the direction that, this won't spill over and have a, big effect on global markets. So do you expect kind of a rebound? What are you expecting to see this week? I know we got big news coming Wednesday, but what do you see this week kind of looking like in terms of price action?
Monty, you heard it from AJ Monty, your uncle, on our cocktail hour on Friday, as well as, whenever you guys have had him on. He's been nervous and not calling for a full blown out, 20% bear market or anything like that, but he's been sounding the alarm about nervousness and that people may use almost anything, Monty, as a catalyst to take some chips off the table, because the upside moves tend to be very small and the downside whooshes tend to be large. And that's not just that old adage, stairs up, elevator down. It's describing that we've done 54, 55 new highs for the S&P this year. And yet, most of them have come, by like 0.25%, 0.5%, that sort of thing. Even when we break out of a couple weeks sell-off, which we've seen a couple times this year, we go right back to where we started and basically just hit a wall right there, roughly in the 4,500 area. So I think overall it's going to be a good week for crypto because just as CJ said, we are very likely to see and hear that the Fed is not going to move on Wednesday. That even though inflation is running much hotter than they expected, transitory, take a drink, that they'll say it's transitory and that they will say they need more data because of some of the weak consumer data they've seen lately, including the employment numbers for August. They'll want to see October numbers and maybe get an early first look at the November numbers before the November Fed meeting, because we do not have an October meeting. They could elect to meet in October, but I think they only would if it was an emergency, guys. So overall, Monty, I think we drift lower, bounce around into Wednesday, and then perhaps on Thursday and Friday see a rally to end the week.
Yeah, I'm inclined to agree with you there, John. We've been talking a lot on this show about the importance of a risk-on attitude entering the market for that second leg up in crypto, and I think that I'm inclined to agree with you guys that perhaps after Wednesday we could see the start of that risk-on attitude. Today, however, though, I'm going to quickly pull up the Bitcoin chart because we are seeing a reflection of the S&P's price action in the Bitcoin price action today. Headed back down to retest this highly critical level of 42.5. CJ and I have talked about this level a lot as a critical level of supply absorption. And as you can see, once again here, we wicked down to pretty much exactly 42.5. And this supply was absorbed and we kind of came back up a little bit. That being said, this is still a concerning candle. We're back below the 200 period SMA. And I think until we, kind of break back above these critical levels here, we could be in for, maybe some continued negative price action leading into the day Wednesday. So we'll be watching this here. And, not surprisingly, when you have this sort of price action with Bitcoin, you tend to see the entire market across the board taking a hit. As you can see, Ethereum as well, retesting the comparably critical level. And that's something that we've said as well. Bitcoin's most critical level to the downside is 42.5. ETH's is about 2,900. And you're seeing that here. We broke below the critical level of 3K, but there was a significant amount of buying that occurred right below that 3K level and kind of brought us back up above that level. So I think that people are still willing to buy the dips here at these critical levels of 42.5 and just below 3K for ETH. But until we get that risk on environment, I don't see us breaking above 50K, even breaking above 4K for ETH. I think that is going to require a risk on attitude that we'll only see when the S&P is performing a bit better here. But CJ, we lost you there for a sec. I'm glad you're back because I wanted to toss a question for you. One thing that I was just saying to Doc was that, one thing we talk about on this show is the importance of a risk on environment to that sort of impending second leg up in this market that we've been talking about for so long. Today, we're seeing Bitcoin come down with the SPX, not surprisingly. And you have talked a lot about that moving strategy with the SPX kind of bouncing from that 20-period smooth moving average, what that's meant for Bitcoin. Now that we're below these levels, is there any historical context? I know you're a big market historian for this sort of weakened S&P and Bitcoin's price action as well.
Well, I mean, it's pretty evident and pretty clear that if the S&P or just general markets, when they're slumping, it's going to affect Bitcoin. It's going to play into Bitcoin. It's not like investors are just saying, oh, well, where else can we put our money? They're going to put their money in cash, and a strong dollar is going to make it more difficult for Bitcoin to rally. Doesn't mean it can't rally, but when the DXY is increasing, typically that leads to kind of a stagnation period, if not a complete bear market in Bitcoin, which is what we saw in 2018. So, it's clear that the stock market and the equity market is making it difficult for Bitcoin to rally, especially the alts. And so I think, yeah, I completely agree with you. We need to come back to kind of a risk on type mentality. But I think the rest of the day has a whole lot to show us, because we already are kind of bouncing back from that critical 42 level. As long as we hold the 42 level in Bitcoin, the uptrend is still intact in my mind.
Yeah, CJ, you make a great point there. It seems like we are bouncing back in both Bitcoin and ETH, but I think the alts could potentially fall a bit further here, given the fact that, Bitcoin has that critical level of 42.5, ETH has 3,900. Some of these alts are very far overextended. So we should definitely take a look at those. Anything you've been looking at today, CJ? Any alts you've seen making a, particularly strong move to the downside so far? Oh, you're muted.
Oh, sorry. I can jump in because there's a whole bunch of them that are getting, kind of wrecked, as they would say in crypto land. IOC is down 15, 16%. KIN is down 16%. I mean, there's a whole bunch of them. You can go deeper into it and see even more damage in that particular space. But I was kind of surprised, Monty, that we gave up 44 as quickly as we did, 44,000 for Bitcoin, trading down 7.8% right now at about 43,875. I know that's only slightly through 44, but I think for some people, and we could easily be right back above that. But for some people, I think they were looking for, okay, 45 breaks, we understand, but 44 down to 42 is pretty good. And so far, like you say, it's holding nicely. But I was kind of surprised that it went through 45 and 44 like a hot knife through butter today.
I mean, I think it just speaks to Bitcoin's nature as being, a risk on asset that trades somewhat like a tech stock. That's just kind of still where we're at, and that's still how the market perceives it. In terms of alts or doges of the day, I'm not too keen to jump into anything right now. I do think this is going to be a good long-term buying territory, in the coming months. But in the short term, I like to look for assets that are more resilient than Bitcoin, or actually outperforming Bitcoin in terms of the crypto to BTC pair. And one of those assets is CELO or CELO. And, that's coming up on the cup and handle pattern. I could bring up the chart here real quick as well. But essentially, it's just performing pretty resilient in the midst of this broader sell-off. And so, if things are to get a little bit more favorable through the rest of the week, first maybe a potential bailout, or the Fed just coming out and saying, the markets were very concerned this morning, therefore, we're not going to taper, we're going to continue on our path. If markets do kind of reverse and rally back up to that smooth moving average on the SPY, I think Bitcoin is going to have a nice auto rally as well. And when it comes to alts, I think that the ones that are showing resilience right now are probably going to be the strongest to rally if the market does reverse. So I really like that CELO is still holding strong here. No weakness just yet in the oscillators, but I'd keep an eye on that one throughout the week.
If you could just leave that chart up real quick, CJ, I'm glad you brought up CELO because we've been talking a lot about how the DeFi sector in general has been very depressed over the last month or so, and I think CELO is a great example of that. I noted from that chart that you were sharing here that if you look during the month of kind of beginning of August into September, just how low that volume was there during that period. We had very, very little speculation happening in CELO because of the fact that Ethereum gas fees were so high. Speculation was happening elsewhere. Now we're seeing, a strong uptick. We saw it first on that big spike, but now a nice steady build in volume over the last 3 days here. And I too am very encouraged by what CELO is showing here. But I wanted to show just a quick other chart here, CJ, and that is this chart, one that we talk about quite often, Bitcoin dominance, because CJ, you've talked a lot about this and what market conditions may lead to a retest of this moving average. And I think we may be seeing that now. Like we pointed out, Bitcoin's bouncing from 42.5K, whereas a lot of other alts that have been more overextended, may perhaps continue to fall down. Do you think that Bitcoin dominance could continue to climb until Wednesday if we don't see any news coming out of the Fed, any positive news for Bitcoin? What do you see when you take a look at this chart here?
Yeah, here I'd love to bring up my dominance chart because I do
Yeah.
have a couple things highlighted there as well. We've actually fully returned to that moving average that we've been talking about. The 20 smoothed. We had been depressed all throughout, the recent uptrend in assets like ADA, Solana. That really led to this massive decrease in Bitcoin dominance. However, now that we have a lot of those alts giving back profits and Bitcoin being the most resilient when preserving losses, we actually get back up into Bitcoin territory. So overall, I do expect this chart to eventually break into kind of an H of death where we break this final support level at around 40% and then go into a very large altcoin season that perhaps many have not seen or experienced before, including myself. But I like to kind of highlight where to be positioned in terms of Bitcoin dominance. I think when we are increasing and going back to this moving average, it's probably better to have a primary allocation in Bitcoin. Then once we start to trend downward, once again, that's really when the altcoin season takes hold. But as you can see from the chart, I just don't think we're necessarily there yet. And sure, the rest of this week, time will tell based on the decisions of the Fed, based on the outcomes of what happens in China. I think we'll know a lot more. But as of now, we've returned to that moving average, and I think we're just kind of going to consolidate at that particular level.
Yeah, I'm inclined to agree with you, CJ. You've made the comparison of Bitcoin dominance to sort of a volatility index for crypto. And I think we're seeing a great example of that today. The market is very risk off right now, and it may continue to be that way until Wednesday. So if we don't get, a bounce in Bitcoin dominance, I think I'm going to wait to enter any altcoin position today. I don't necessarily have a Doge of the day. Like CJ pointed out, there aren't many assets that are showing strength in this market beyond CeeLo. But what I will be watching for is for a bounce in Bitcoin dominance from that critical level there. I think over the next 2 days, we'll continue to see profit taking in the alts as, the traditional equity markets get hit kind of hard over the next 2 days. But I'm going to be ready for a bounce. And I think Wednesday we could potentially see that given the price action we're seeing today here. So I don't necessarily have a Doge of the day, but curious to hear if you guys are watching anything in particular today.
I'm really thinking that I will pull the trigger if we get a breach of 3,000 in Ethereum, big guy, because I've been adding to Ethereum anyway. You guys know that I'm one of the folks that thinks that we'll see a flippening of market cap, and I thought we would see it by the end of this year, guys, seeming less likely, but nonetheless, I think I have enough Bitcoin for now. And I think that Ethereum on dips like this, and this is, a 9% dip, those are the ones. I don't like buying on a 1% and 2% dip. I like accumulating on larger dips like this. So I've already got bids in below the market here and waiting to see whether or not we do break 3,000 on this move.
Let's highlight a couple assets, or I'd like to highlight a couple assets that many in our community have been asking for, like optimal entries or optimal dip buying to dollar cost average into. So I guess I'll start with Solana here. Seeing a nice bounce off of that moving average. Not a whole lot of support at this level, but I think that the 115 level has really held up. Got a very nice hammer candle at the bottom of the downtrend. So I wouldn't mind picking up a little bit of Solana at these levels. Another one that I like is Serum. That is the primary decentralized exchange within that Solana ecosystem. We've definitely had a large change in behavior of the trend ever since we topped here back on September 13th. But from these original clusters, I think we formed a lot of support to the downside as a result of these Fibonacci levels at about 815, also about 720. They really acted as resistance on the way up, and therefore I think they're going to act as support on the way down. I'd like for this to get above the moving average before I dollar cost average in. I'd like to buy into a little bit of strength in terms of serum, but both of those assets I think are getting close to pretty nice like long-term entries. Maybe not in the short term, but long term, I think those will be very fruitful buys.
Nice. Yeah, I actually do want to add one asset to that list as well. And this is another one that a lot of members in our community trade too. So I'll just quickly mention that. And that is Cardano, because this is an interesting chart here. You know, we wicked down to a very critical level. $2 for Cardano is a level we haven't seen since all the way back here in May. And we are back down at this level, about $2.15. As you can see, similarly to what we saw in ETH and Bitcoin, you know, this was relentlessly bought when we dipped below a critical level of $2. So now that it's already tested this level once, I'm going to be very curious to see what happens if Cardano dips below $2 again, because, you know, obviously we had a lot of buyers step in this first time, but the market is still looking somewhat weak. We're back below this moving average. And if we do perhaps come back down to retest $2 again, it's going to be interesting to see how many buyers are left to buy this dip, because just 2 weeks ago here, we had relentless dip buying occurring when we had this massive sell event on that day of liquidations. And now, once again, buyers had to step in here as we start the week in a very risk-off market environment. So I think Cardano is going to be interesting to watch. I'm not necessarily jumping in right now, but if we do retest $2 again, and perhaps we see more continued accumulation, to me, that's going to just speak to the fact that long-term buyers are looking to get in at this price point and believe that it is a good dollar cost average for the long term. So I'll be watching this closely, because this could be a week where we see a real strong amount of accumulation for assets like Cardano, and, like CJ pointed out, Solana as well.
Well, I would point out, guys, that even though we started off sort of saying we're not going to see a lot of dull trading, and I believe that's true, we certainly are focused more on buying on dips than we are on catching some momentum. I don't think the momentum will be to the downside because of what I've said about what I anticipate the Fed's going to do on Wednesday. So I think that we will start to see some nice appreciation either on Wednesday or Thursday and Friday in both stocks and alt currencies. So I am more patient and waiting than I am getting ready to take a big flyer to the downside.
I'm right there with you, John. Patiently waiting to deploy some capital. I think this week could be the week, so exciting stuff. If you guys want to come hang out in the crypto room, CJ and I will be there all week waiting to enter this market. So if you want to head over there, you can try it for just $1 for the first month at marketrebellion.com/try crypto. We've got a global community of traders from all around the world. We publish actionable trade insights with exits, entries, and stop losses. We also have an extensive education curriculum and a whole lot more. You can try all that for just $1 for the first month. But prices are changing soon, because we are rapidly approaching September 25th, the day in which we'll be launching Crypto 2.0 and massively overhauling our platform. CJ and I are super, super excited about that. So if you want to lock in at the old price, you have 5 days left to do it at marketrebellion.com/try crypto. And if you're looking for a broker to get started trading crypto, head over to investvoyager.com, where you can trade 60 plus assets commission free. You can earn up to 10% interest on assets like USDC and up to 12% on DOT. And if you do head over there, use code REBEL25 for $25 in crypto when you sign up. But that's all I got for today. CJ, Doc, any parting words for our audience?
Yeah.
Don't panic. That would be my words. Don't panic.
I had to wear the HODL shirt today. I had to. But yeah, speaking to Voyager, now that the VLP, Voyager loyalty program is in place, we actually had a lot of community members who were pretty pleased that they received VGX in the form of price improvement for their trades that they had made. So I think a lot of individuals weren't necessarily aware of that. And I think that's why we actually got a very nice pop up to $3 in VGX over the weekend. But I don't want to anger compliance or anything like that. So I'm going to close up the show today. But thank you all so much for watching, and we'll see you soon.
Thank you.